We've hired over the last couple of years, between 3,000 and 4,000 pilots. So we largely are where we need to be. We continue to hire, I'd say now more at a normal attrition level compared to pre-pandemic levels. The challenge we have at the moment is we need to get all the new pilots trained, and we have a fixed number of training devices. We're doing well this summer coming up. We are minimizing the training. We've got most of our big training events already behind us, and we'll be able to put more and more pilots into the operation, which gives us the ability to
that
fly a
was
bigger schedule.
Delta CEO Ed Bastian. While Delta may be curtailing its hiring spree, it seems there is a short runway to get pilots trained up ahead of the summer travel season. With airline earnings underway, we welcome TD Cowen Senior Research Analyst Helane Becker for more on what to expect from the current quarter as airlines navigate ongoing demand and infrastructure challenges. Helane, thanks so much for joining us. So what did you make of Delta's results and their outlook?
Thanks for having me. So I think the outlook was more important than the actual results for the first quarter. People forget that the first quarter is the worst of the year. And this year, January and February, were still not as good as they've been in prior Januaries and Februaries. And I think part of it was the early MLK holiday. I think people had just come back from traveling and were maybe needed a rest. I think travel picked up in mid-February, and it definitely picked up over the last 4 weeks. We're about equal to where we were in 2019. And so I think the first quarter was actually wound up being in line with what we were expecting, but we were lower than consensus. And for the second quarter, we expect very strong results. We expect what I've said to our sales force and our clients is that we think we're going to see record or near record revenues for second and third quarter. Whether we have record earnings remains to be seen, given that we have higher fuel costs, higher labor costs, higher maintenance costs, training costs. And so costs are going to weigh on the industry, but revenues are up a lot. And I think that will carry the day for at least the second and third quarters.
And speaking of costs, American Airlines warned that their first quarter profit is going to be short of estimates and because of high costs. So what are the high costs that are most concerning to you? Is it jet fuel? Is it labor costs?
Yes, it was both. So labor costs have gone up significantly. There's been a combination of two things that have happened. One, you had a lot of retirements and you had a lot of people taking not so much redundancy programs, but taking leaves of absences during the pandemic and just never came back to the industry. So you've had a huge increase in hiring over the last year and a half. And actually you played that clip from Ed where he talked about that. What that means is as you think about people gaining another year of experience, another year and a half of experience, you're going to see productivity improvements. And so that labor cost, even though the absolute dollars are going up, the average should go down because you have people with less seniority. So that should be a benefit. Fuel is going to remain volatile, and the industry in general doesn't hedge. And I don't see that changing. They've never really gotten hedging right, so they just don't do it. And they adjust ticket prices to account for higher or lower fuel prices. Maintenance costs are up because of OEM delivery delays. The OEMs, Airbus, Boeing, and others are having issues getting with their supply chain. And so there's been a delay in the number of aircraft that they're delivering. They are not back to their pre-pandemic production levels. And so that means think about CapEx moving to the right. There being fewer seats available. The FAA asked the 4 biggest airlines serving the New York market specifically to cut capacity by 10% this summer. We're already down 10% from where we were 4 years ago, and you've got demand that's equal to where we were. So that says to me, fares have only one way to go, and that's up. And we should see some margin improvement, but we're definitely going to get record revenue.
Despite the concerns about a recession, I mean, Delta's saying basically, look, we're going to see strong demand, even if people are talking about a recession. I mean, how recession-proof is this? Are we? What do you see happening if there is a recession later this year?
That's such a great question because with airlines, you never see the downturn coming because they're such a lagging indicator. So we're worried. I'm worried about the fourth quarter, I would say, because I expect, as I said, strong third and second quarter demand. But fourth quarter, I think people may be traveled out. I think the hybrid work environment is abating a little bit. Managements, bosses want their people back in the office. There's only so many times you can take your kiddos out of school to go on long weekends. So I think as you think about moving further and further away from the pandemic, I think you get fewer and fewer of these what we call bleisure trips that combine business and leisure. And to your point, I think the fourth quarter will show some of that weakness. The Fed seems to be trying to engineer higher unemployment. Personal balance sheets are experiencing the impact of slower wage growth, higher fuel cost, and we're coming out of the heating season into the air conditioning season. Those costs have gone up. Food costs have gone up significantly. So as people think about what they want to spend their money on, yes, experiences for the summer, but then they have to rebuild their personal balance sheets. And so I think as you go into the next recession, the industry isn't recession proof. I know a lot of my colleagues thought that would be the case in the last decade, and it turned out not to be. I don't think it will ever be recession proof because it's so economically dependent, and I don't see that changing, frankly.
TD Cowen Senior Research Analyst Helane Becker, thanks so much for joining us.